What's going on, guys? My name's Dave. Welcome to the Bull Bear Brief. We have three major stories to go over today, and the first one is on Warren Buffett. 2 weeks ago, when we had the Bull Bear Brief, we talked about how he was selling all of his Apple shares, or the majority of his Apple shares, and going into cash for Berkshire Hathaway. Now, this is very important to note that now he is starting to buy up these specific stocks. Our second story is going to be why this billionaire hedge fund manager says the overall market's fundamentally broken. And then three, because we are going to be starting to cut rates soon and the cyclical defensive stocks are starting to rise, why these firms are putting and where they're putting their money right now while they start to cut those rates. So we'll go over that and much, much more. So make sure you stay tuned. All right, guys, this is your S&P chart for today. It is August 22nd, around 1:33. This is what you see. This is where we are at in the overall market. We are so close to kissing those all-time highs at 565.16. Now, we had a big pullback today. No major news except for the initial jobless claims came out this morning, a little higher than the previous month, but as the forecast was expecting. So the overall market is having a pullback day after a huge run up off these bases. Now, our three pieces of news that we have today, the very first one is on Warren Buffett. So let's just go over this now. So Warren Buffett is a net seller of stocks for over 7 consecutive quarters. He's also built Berkshire Hathaway, as most of you already know. Cash equivalents and short-term investments over $277 billion. The large cash stockpile in the the largest cash stockpile in the company's history. The legend investor, is he throwing in the towel on the stock market? No, not completely. Buffett just bought shares in 7 stocks. Now, these are a few of the stocks. Now, if you guys remember, he did Occidental. So he's adding into Occidental. We can take a look at Occidental right now. We can just show you where we are at. Because I remember when he was adding into this, oh man, this was a couple years back. It was somewhere in this area here. So he's actually adding more. You can see this is like the Buffett support line at $56 here, it looks like. So he keeps adding more into this. It's just trading sideways. Now, as you guys know, Berkshire Hathaway, or Buffett himself, is a longer term investor, meaning when he takes a look at these stocks, he is looking for a very long buy and hold for a very long time, if not forever, in certain situations, as he has done with Coca-Cola. He's done with many, many other stocks. Apple was one of them as well. But now he is buying more of Occidental. Okay, so Berkshire Hathaway purchased over 1.1 million of Chubb. So ticker symbol CB in this Q2. It wasn't a shocker either because Buffett began buying the insurer last year without revealing its identity. So let's take a look at CB as well. And there's one of these tickers on here that I just don't really agree with. Now, if you look at this stock, obviously it's a slower mover. That's the kind that he likes. If we look at this daily, you can see here, this thing is doing really well. It looks like right here is the Buffett buy right here. You can tell somebody big, a big investor was buying this up. This could have been him too. I mean, higher volume is going to be where you're going to see Buffett buying into these shares, but this is Chubb. This is an insurance company. Now, we know insurance does good in these cyclical times as well. When you're looking at consumer discretionary and insurance, a lot of times you'll see that they're doing better as we have rate cuts, because rate cuts means that the overall economy is starting to slow. We have to cut those rates in order to continue to keep the economy moving. Of course, Fed Chair Powell is trying to have a soft landing. Now, the CB Chubb, you can see this is looking very good as it's been on a beautiful trajectory to the north side for quite some time now. I mean, this is its previous, this current run, but its previous run off the pandemic lows, you can see is just a constant uptrend following and holding its 200-day moving average. So CB looks very, very nice. Let's continue on this. So Buffett's 3 other additional existing positions in Q2 shares common denominators. He's increased Berkshire's stake in Liberty Media Corporation Series A and Series C. So that's LSXMA and LSXMK. He also bought Siri XM Holdings, which is Siri, SIRI. This is the one I don't really agree with. Now, of course, who the hell am I to talk shit about Warren Buffett and his way or his style or what he thinks he's gonna buy? But the old man is buying an XM radio. Sure, it's not radio like you and I would turn it into an old 1995 truck and turn on the radio, or early 2000s where you turn on the radio and you're listening. This is XM radio. It's a satellite radio. But my thing is, this is on a downward trajectory. If we go to the weekly, let's take a little look at this. You can see it, it used to be a very beautiful stock, way up here, obviously after splits and all that stuff, even if it actually didn't have any splits, but this thing came way down and is just hanging out down here at this low. It's almost like a penny stock now. So why he would be entering into SIRI, it just really baffles me. It says he bought 96.2 million shares of Sirius XM radio holdings, boosting Berkshire's position in the satellite radio operator by more than 262%. Liberty Media owns 83% of Sirius XM outstanding shares. So very interesting. I don't know if he's trying to buy this thing up or what he's trying to do, but old Warren Buffett seems to think Sirius XM radio is going to end up going somewhere. I think that this is a dying company, and I know he likes to look at companies that are going to have exponential growth, that are going to continue to grow, like Coca-Cola, where they continue to have good fundamentals and they continue to grow. And speaking of fundamentals, we can look at SIRI and some of their fundamentals really quick just to kind of see what the hell is he seeing here. What is he seeing in SIRI? And if we look at the overall fundamentals, you can see they're pretty stagnant. They're not really growing, they're not failing. We can look at the overview here. You can see this is the PE ratio here, and this here's the quarterly earnings. They're kind of just trading sideways. Here's the quarterly, that was the annual. The quarterly look like they're heading down. The annual, you can see they're slowly growing, but it's nothing, it's really nothing, no eye-opening, not an eye-opening trade, So I don't understand what he's doing here. Of course, I am not the owner of Berkshire Hathaway, but if you take a look at that stock, he's doing really, really good. Now, he's also put a new position in here, and ULTA, so Ulta Beauty. We can take a look at that. I haven't looked at this one yet. Actually, I'm pretty excited to see this. Let's change this back to the daily. Now, we know that a lot of these beauty companies have been doing really well. This one is much well below its 200-day moving average. You can see it's had a big hit here. So he's decided to take a stake in this ticker ULTA, this beauty company. The biggest new position for Berkshire Hathaway in Q2, Buffett and his team bought more than 690,000 shares of the cosmetic retailer worth nearly $266 million at the end of Q2. The purchase of Ulta looks like a classic buy on the dip. Ulta stock has fallen around 20% this year, and the decline has been largely due to the company's disappointing full-year guidance. ULTA CEO Dave Kimball warned that customer spending on cosmetics has slowed. Now, he might say that, but there are a few other ones out there that have done very, very well. So, buying more than 1 million shares of the aerospace company HEI. Now, I have a friend, shout out to you, Beef Stewie, in our Discord. He loves keeping his eye on these aerospace companies, and Berkshire Hathaway is now getting involved with these, which is a beautiful sign as well for it to continue. Now, if you believe in aerospace, I think it is our future, and if you don't believe it, my boy Beef Stewie will get you to believe. He's done extensive research, not on just HEI, but on many, many other ones in the aerospace sector. And I think aerospace is going to be, I think eventually, in maybe 200-300 years, you're going to look up and you're always going to see something in the sky. There's always going to be something in the sky. I feel like it's so much space that has not been utilized. I think it is our future, is to constantly be in the air and moving around. I feel like we are still stuck on the land. You know, we got helicopters, we have planes, but it takes a lot to get us up in the sky still to this day. I think aerospace with the drones and I think war is going to be fundamentally changed due to these aerospace technologies. And I think Warren Buffett, this here I would have to say is his top kind of top buy here. So very, very interesting to see HEI. So I definitely put that on your watch list. Keep your eye on HEI. It's also a little bit faster mover than he usually is buying. So very interesting here. So we just go back to this, the best of the bunch. They're saying if you're an income investor, you might want to draw into Series XM Juicy Forward Dividend, whatever. You know, if you're into the dividends, that's cool. The company's dividends payout ratio is 31.5%, is also low, indicating financial flexibility that can enable to an increase in the dividend. Also, the Liberty Media stock, great. And then of course they go into their, should you buy Occidental right now, all that good stuff. You guys know me, I am more of a swing trader. Of course I have long-term investments I give that to my financial advisor. I just tell them when I want to get fully in and fully out using that 21-day moving average. But when I'm swing trading, I like faster moving stocks. Next up is going to be the billionaire hedge fund manager that says we are fundamentally broken. This David Einhorn, excuse me if I'm not pronouncing his name right. So Einhorn explained to CNBC interviewers why he sees the current market as fundamentally broken. In the interview a few months ago with Scott Wapner, Einhorn asserted that investors are not rewarding opportunistic smaller companies with capital, instead overinflating large companies that compromise the biggest ETFs. Now, with that being said, guys, that is very, very clear that what he is saying there is, instead of like trying to find a small company like a lot of investors used to do, they would try to find a small company and let it inflate, let it get bigger. And you can see that the IWM has been lagging very, very severely. So if we look at the small cap ETF, you'll see it has been lagging crazily compared to any other stock that's been out there, okay? So here's your IWM on the weekly. You can see it's just been sideways. Where if you look at SPY or QQQ, it's been going up QQQ. It's been going up much higher, much faster since these pandemic lows, okay? So the IWM has just been trading sideways. You know, if this was the IWM, it would just be trading sideways right here. Where the QQQs, the S&P 500, you can see they're inflated by Apple, Nvidia, Microsoft, Google, AVGO, Meta, Netflix, Amazon, JP Morgan, Berkshire Hathaway, those type of stocks, right? And they're being inflated, and these are way overvalued. The biggest reason on this is going to be due to the AI race right now. Now everybody's putting all their money into this. Hedge funds manager and small investors like you and I are foreseeing that these are going to take advantage of AI, right? And that they're going to be making that money in the future. So we're betting on the future of AI instead of betting on the future of smaller cap companies. So they're overinflating, like this billionaire just has said. When I say the market is broken, what I'm saying is there's not enough money that is being dedicated. Oops, excuse me. There we go. There's not enough money. They're being dedicated to investing, trying to identify undervalued companies and reward companies with new capital that have good growth opportunities. And if you guys really think about this, you know, why does anybody IPO, initial public offering? Why does anybody do an IPO? Well, they're giving an initial public offering to give the public an opportunity to invest in a company. Then they use that money to grow. If they don't have anybody investing in these smaller companies and they're giving all their money to the bigger corporations, then how does one grow? They don't have the investments. They don't have the funds to grow. And on top of that, with the rates being so high right now, you got to understand it's hard to borrow. So it's hard. It's very hard for small businesses right now to continue to grow. So that's really, really important what he's saying here. He funds Greenlight Capital also argued that the largest ETF issuers like Vanguard, BlackRock deny shareholders the ability to improve the conditions of companies or request changes. This is because the ETF issuers have become the largest stakeholders in many mega cap companies, but remain passive on shareholders' vote and meetings. So they're basically saying they don't care. They're going to do whatever it takes to make sure the ETF is profitable for not just for themselves, but for their shareholders, which I mean, I have to disagree. Why would you want to change that? You know, if it's working for you, why not have that big stake in these bigger companies that are more likely to succeed, right? I don't think he's, blaming them, but he's saying it is an issue. That's a big reason why these smaller cap companies aren't doing well. Once you have the largest shareholders in every major important company be a passive fund, shareholders' activism becomes merely impossible to improve corporate governance, Einhorn said. Another issue Einhorn pointed out was the lack of IPOs despite favorable market conditions. So another thing, why would anybody do an initial public offering if they don't think they're going to get the funds from doing it? It's almost no point in doing that and having more people invest in you and more people own your company when you could just borrow money, borrow that money. There's no point. So he's saying there's lack of the initial public offering. So there's lack of ability for us to invest and lack of investors, lack of companies trying to get investors. So that's a big issue that's out there right now. But another thing too is this AI thing, this inflation in this AI, it's just going to keep on getting bigger if we don't get a pullback soon, okay? And last but not least, and I think this is really important because we have the Jackson Hole, which by the way, if you're watching this at a later time, I will be streaming it on Friday. So if you're watching this later than Friday, that's A-okay. Make sure you hit that like and subscribe button, guys. Go down to the bottom of this page, click the more, you'll see I have a link tree. Click that link tree and you'll find out right away that, here, I'll just show you here. Right away, if you click on the link tree, you scroll down here, you click more, you can click on this link tree right here, and you'll see that I have YouTube. And if you go to the YouTube here, you'll see I have this trading school. It's absolutely free. These are tested strategies that I have learned that I'm willing to share that free information with you. Of course, we have well over 400 videos here that you guys can watch and enjoy. And I come out with something new almost every single day, if not at least 3 times a week, guys. So make sure you hit that like and subscribe. And of course, we have a Discord. It's a free Discord. We always have somebody active in the chat in there, willing to take your questions. If you're trying to learn how to trade, or you just want to talk about the overall investor sentiment in the overall market, you're more than welcome to do that. We welcome you with open arms. The only thing we ask is that you have an open mind and a heart of gold. And then of course, you can find me on Instagram, TikTok, Facebook, and Twitter, of course. So go ahead and click on those links. Next up is going to be the major Wall Street firm pick stocks to buy when the Fed cuts rates. Experts largely agree that the Federal Reserve will be cutting interest rates in the next month. And if you guys aren't aware of it, here's the CME Fed tool. We can just talk about this really quick. So the CME Fed tool just shows that in September 18th, now things might change due to Friday's Jackson Hole report with Fed Chair Powell speaking, but 75% of the analysts agree that we're going to be cutting about a quarter of a rate cut there, and 25% think a half a rate cut. So we will see very, very soon what happens there, but most likely we are all in agreement that we are going to be cutting rates soon. So that's why this story here is so relevant. So let's continue. 67% probability of a 0.25%. That's what we just went over. So what does this mean for stocks? Let's look what happened in previous Fed cut campaigns. In 12 of the Fed's 14 rate cut cycles since 1929, the S&P posted a positive return 12 months after the initial cut. So they're saying that most likely the S&P 500 is going to continue to heading higher after the cuts, right? So what is going to be our biggest sectors? The 2 exceptions occurred after the Fed began lowering rates in 2021 and 2007. I said 2021, I meant 2001 and 2007. They may feel uncomfortability recent, but neither economic environment resembles today, the report said. The former happened amid the dot-com implosion and later was precipitated by the subprime mortgage crisis. When defense beats offense. Let's have a look how Fed rate change affect market sectors. Defensive sectors, essentially industries that tend to be more resistant to the economic uncertainties, such as healthcare and utilities, generally perform well when interest rates are rising. Conversely, cyclicals, sectors that benefit from accelerating economies, such as consumer discretionary and industrials, have a greater potential when rates drop, the reporter said. So does that mean shift cyclicals on the horizon? This is another market dynamic which depends on how fast the Fed is cutting rates, the reporter said. When cyclical stocks do best based on analysis, when the Fed enters into a period of gradual rate decreases as expected in this cycle, but there was a twist here. The definitions of defensive and cyclical sectors themselves has shifted over time. For example, technology historically has been in cyclical groups, the reporter said, but in the Fed's tightening cycle, large technology companies have taken on many of the characteristics of a more defensive companies. The Fed lifted rates in March 2022 through July 2023, and the tech companies had outperformed the market. Their huge cash holdings among the factors have insulated them from higher borrowing costs and helped generate income as rising rates made more cash rewarding. The investments firm chose stocks have outperformed in market months, expected imminent rate cuts, and a soft economic landing, easing inflation with no recession with forecasts. Expectations of rate cuts were indicated by 2-year Treasury yields, and soft economic landings was indicated by a 10-year Treasury yield either falling just a bit or rising. In this environment, investors should seek value stocks with strong earnings momentum, Jeffrey said. The stock is selected all attractively valued, it said. Price to earnings multiples below 20. Now, I don't really care about price to earnings multiples if you go by those. Sometimes, but they're telling you like Google, Crocs, JP Morgan, Marathon. These are all just really, really safe bets, because they're more likely to continue heading higher. Okay, and you guys can see this in the overall sectors. I can just bring this up really quick. If you look at your sectors, you'll find that XLU, let me bring this up. Whoopsie. We got the sector ETF here. And if we go down to XLU, you'll see XLU has been outperforming. Okay, let me turn on my Market Smith indicator here. Well, it's not bringing up my ribbons for me. Oh, that's why, because I was on the daily. All right, there we go. Now you can see here, it's much higher than its 50-day moving average, and it's riding that 10. XLU is a defensive stock, and you can see that it is doing very, very well. It's got this beautiful cup with handle, and now it's heading higher. So it is a defensive stock. We also have communication services, which was doing very well for quite some time. We have XLP, which is your consumer staples, which is outperforming currently. So it's looking very, very well here. And these are your defensive stocks. Now, again, healthcare. They talked about healthcare. Healthcare has been doing really well since January, guys, since January. They have been doing really, really well here. And you can see they are continuing higher as well. So XLU, XLP, and XLV, which is your utilities, your consumer staples, and your healthcare, just like the article said. Now, one last thing is going to be that XLK. XLK is your technology fund, and they're still lingering around that 50-day moving average. You can tell that it started our bull market way back 2 years ago in the October lows, and it's continuing. So we will see very, very soon if it has a chance to continue. Of course, as we stated in the beginning, the S&P 500 is close to kissing those all-time highs. I'm expecting some kind of a pullback to actually show health in the overall market. So if we can pull back, show new higher lows, hold a 50-day moving average, and my best bet, a 21-day moving average, and show some more better setups, because I like those trend and base breakouts. If we can show better setups on this pullback, I'm looking for some swing trades, and I really hope to see those setups. I hope to see you guys very, very soon. If you haven't already, hit that like and subscribe button. If you've learned something, if you like the Bull Bear Brief, we would like you to be a part of it. So hit that like and subscribe, join the Discord. And of course, if you want to use this amazing platform right here, you're more than welcome to, guys. It's definitely in that link tree. Click the trading view. It helps me out a lot. It's free to use this trading platform. If you end up upgrading to the Essential program and you use my link, not only do you get your first month free, but you'll get a month free on me. I believe it's $15 off. And the Essential plan is the cheapest one that you can buy. That's the one that I use. It's only $15 a month. It's absolutely free. You get a beautiful charting platform here. You get awesome watch lists. And of course, if you join our Discord, we give you an update on our swing trading list each and every day. So go ahead and click that link for me and sign up for the Essential plan. It helps me out greatly. I hope you guys have an awesome weekend, and we will see you at the meeting on Friday. I'll be on at 9. Papa Powell is going to be talking at 10. And if you're watching this at a later time, we'll see you in the Discord. Take care, guys. Have an awesome day.